Vibrant Textiles provides you with the following financial data for the fiscal year ending 31st March 2026. Can you determine how efficiently the company is managing its operations and stock? Okay, these are the financial information. Cash revenue from operations, credit revenue from operations, operating expenses, rate of gross profit, opening inventory, closing inventory. Credit revenue from operations is 150% of cash revenue. Operating expenses is 15% of total sales. Okay, calculate the following two key ratios, operating ratio and inventory turnover ratios. Okay, let us start with the operating ratio. Operating ratio is equal to operating cost divided by revenue from operations into 100. Operating ratio will be reported in terms of percentage. Right. Now, first step is to find out what is operating cost. We need to find out what is cost of goods sold and operating expenses. Operating expenses are those expenses that you write in the P&L account of your 11th standard final accounts. Apart from interest or loss on sale of assets, things like that. Some examples we can see is salaries, rent, depreciation. These are all operating expenses. And cost of goods sold, we know the formula. Cost of goods sold is equal to opening stock plus purchases plus direct expenses minus closing stock. Operating expenses they have given is 15% of total sales. So next let me find out what is operating expenses. 15% of total sales. Total sales is cash sales plus credit sales. So cash sales is 12 lakhs. Credit sales they have given is 150% of cash revenue or 1.5 times of cash revenue. Therefore, 1.5 times of cash sales is 18 lakhs. Therefore, total sales is 30 lakhs. We have got the first value. In this question, they have said operating expenses is 15% of total sales. Therefore, operating expenses, one more time, 30 lakhs into 15%, it is 4,50,000. So we have this formula, sales minus GP, and total sales is 30 lakhs, and GP in rupees is sales multiplied by gross profit on sales. This is 30%. Therefore, 30 lakhs into 30%, you will get 9 lakhs. The cost of goods sold is 21 lakhs. Now we have got the operating cost of goods sold plus operating expenses 4,50,000. So you have total operating cost of 25,50,000. Now operating ratio is equal to operating cost divided by revenue from operations into 100. Therefore, the answer is 85%. It is on dot 85%. Okay, so this is the first part of the question, operating ratio. Now let us go to the second part of the question, inventory turnover ratio. Inventory turnover ratio is equal to cost of goods sold divided by average inventory. Cost of goods sold divided by average inventory. We have already found out what is cost of goods sold, which was 21 lakhs. We simply need to find out what is average inventory. Average inventory is equal to opening inventory plus closing inventory divided by 2. Therefore, opening inventory will be how much? Opening inventory was 2 lakhs. Closing inventory was 40,000 more than opening inventory. So opening inventory of 2 lakhs and closing inventory of 2,40,000. The average is 2,20,000. Now if you divide the both, you will get the answer 9.55 times. This is your inventory turnover ratio. I hope you understood this solution. Let me know your thoughts in the comment section if you have any more clarification if you need. Thank you.